Good afternoon, Wednesday, October 25th, 2023, in a very red day in the market. Uh, ES wicking off some points here and coming down to a very important level from a higher time frame perspective. So we got a weekly chart in front of us. We can see the COVID move down here. We can see the VWAP consolidation. We can see the buyers and sellers duking it out down here, and then buyers taking control at this point right here and taking it higher. These widely spaced VWAPs here denote aggressive buying in relation to these narrowly spaced VWAPs that are long-term investors that have been investing for the last 20 years. These VWAPs are old VWAPs. Each VWAP represents a week, if not two. I think it's every other bar. So each VWAP represents 2 weeks um, of average price. So these are very old VWAPs. You can see this is just long-term investors. Long-term investors stayed in the market, and then the market rebounded, and then this is new investing, new money taking it up, and that's why you get these widely spaced VWAPs. So this is long-term investing plus new money that rallied the market into the COVID highs. So we have COVID highs, and then we have selling, inability to take out this edge, inability to put in a new high here, and we get a rejection at this edge, short opportunity, get another rejection at this edge, short opportunity, and then the market finds a low, knocks out a low here, and we get a long opportunity here and a long opportunity here, and I'm talking higher time frame, and then we have a short opportunity here, and that's kind of where we're at. So on a weekly time frame, that is the look. So what we have uh, right now is we're coming into an important level. We'll see it clearer on a daily chart, but we have this wet edge. This is the upper highest accepted price right here at 43.33. Now, price has been higher in this area here, but it wasn't accepted. This is the highest accepted price in a higher time frame. We have a fractal out here that's created from this up at 44.52. That's the new outside edge, but that's a fractal of this, and that fractal is down here. So current higher time frame sandbox, we're in the middle of it down here. This was a break up, and we have a potential to break down in the same way that we broke up here and fill in this space down below. So from a higher time frame perspective, we are in balance in all of this price action here. We aren't extended in either direction. We're right in the middle. So where do we go from here? If the algos were turned on, buying this level, the potential is they're turned on to buy this level. If we don't find buyers here, where do we find buyers? Well, the potential exists to find buyers at lower prices, which means the potential exists for the market to continue pulling back in this direction. I think it's important to note that from the October lows of 2022, the algos have been lapping up price here on this level. and the potential exists for them to continue buying this level. Now they may have sold off in this area here, and they may not be looking to buy here anymore. Maybe they're looking for a lower check. We really don't know. We don't know uh, what's going on in the market, but from a higher time frame theme, we are in the ultimate high time frame balance right now. So keep that in mind. I think there's a composite VPOC somewhere in here. Yeah, it's right here. So this is the highest volume area in the market at 43.13. More volumes traded here than anywhere else on this chart. This is where the most volume is traded. We don't know if it's buy volume or sell volume. We can only assume that it was buy volume here, and now it's mixed. So that being said, we're in balance here. So we got a couple options. If the algos were turned on here, 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 potential to turn on here. So if they turn on here and we see volume increase and price go up, we can make the astute assumption that the algos have turned on. This is the lower edge. We would target this upper edge, and that may happen over a period of weeks, months, or never. Looking to see what the market does. Looking to see. Right now, the market is selling. Okay, for months now, we've been in sell mode. These are weekly bars, so selling, 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 selling. That could change, or it may not. If the market does not find buyers here, and we begin to fill in this space here, these rally buyers here, their average positions from COVID are right down here. The average new positions that were bought are represented in all of these VWAPS. This is a logical place to check if we can't fill this. So this space will be relatively easy to fill compared to this space here. These are speculators largely in here. There's some institutional buying and some 401k investors that came in here. But for the most part, this will be easier to get through than any of this. Keep that in mind. That level is 4040, 4040. So I'm looking to continue a downtrend if we start getting into this area here, and I'll be looking for 4040 as a first area where we might see some buyers. I expect a stop pick at 4040 on any weak hands. Well, they'd be strong compared to me, but any weak hands that are still in the market uh, that might have bought this as a long-term investment, this is where they're going to start getting out, is at this level. We have people hiding stops. We will have people hiding stops behind here. They'll hide them behind here. These are weekly candles, so they're going to hide them behind here. They're going to look left and they're going to say, oh, I'm going to hide behind here. I'm going to hide behind here. Those will be fuel that catapult us down. But looking at this market right now, I'm not. This market isn't going to move on stops. Down here, this is going to be institutional selling and capitulation. If we start moving down in here, it will be people liquidating their positions. It's going to take some work to get through these levels, but these are levels to pay attention to. Lastly, on this weekly chart, worth noting, these consolidations here, that's an important one. That's the COVID participants. We've got other ones a little further back. We've got this one here. It's the big one. That one comes in here. So think of price expansion. We can expand here. We can expand off of these. We can expand off of here. And then this would be VWAP price expansion down onto this VWAP down here. So keep that in mind. For long term, you can use VWAPs to um, isolate where the buyers and sellers have their average positions and where we might see some stop picks or a place where the market might find new buyers. So if they bought here before, the potential exists that they're waiting for the market to come down to find a good value here and perhaps buy again. So if we lose this level, it isn't unrealistic to come down in the same way that we popped up on this move here, where we broke above this wet edge. It's not unreasonable to break below this wet edge. And then we have a rotational market around this balance in here. All right, so we're going to jump over to a daily chart now. I use 1440 minute bars. That's 1 minute, 1400 minutes in one day. The reason that I use 1440 minutes is the market, the way my data works. The minute bars hold all of the buy sell information. Tick bars hold all the order information. So is it a limit order? Is it a market order? Is it a stop loss order? All of that's in the tick data. Minute bars just have volume, and day bars have kind of uh, a rounded up volume. So the minute bars are far less CPU intensive to sort through than, say, a tick bar, but they have more data in them than a day volume bar. So now we're on a day chart here. We don't see the COVID lows on this chart. I don't have enough VWAPs. If I had another 750 VWAPs, we would see everything we saw on the weekly chart on here. But because the CPU load is pretty intense, you can switch time frames and see that broader VWAP view versus holding on uh, versus using more VWAPs. So I will just go up in time frame if I need to see a broader picture. The space in between the VWAPs will be wider, but on the daily and weekly time frames, I don't need to see every bar or every other bar even. Um, so that's fine. Okay, so from current price action, we put in a high back in February or in in July, uh, up here at 46.81, and we couldn't take it up to all-time highs. So a couple things to note here. This has happened before, where we popped the top off. We popped the top off and then couldn't hold it. So the wet edge is here. We popped this top off here and we couldn't hold it. Rotated underneath. We popped the top off here, couldn't hold it, and rotated underneath. And we have done the same thing here. We took out the the historic edge, pop the top off here, the potential exists to rotate underneath. This is the wet edge on the south that we talked about on the weekly time frame. The potential exists to rotate underneath. So we can go to both sides. And just because we break down underneath does not mean that we're in a bear market. You can see that we have in this current wet edge, um, there were times when we broke underneath it and still went long. Broke underneath it and still went long. This is range expansion. The algos that run this market know that the average person's got a stop down here. They go down, they'll run that through, take the other side, and use that liquidity to move the market up. They did it again here. They did it again here. They did it again here. And you'll see that happening all the time. So it is not unreasonable to explore a little bit down here. Tons of stops will start to get piled up here. If we see any kind of a consolidation here, you'll have people taking both sides. You'll have buyers looking to go long. You'll have sellers looking to go short. One side's wrong. The algos are going to take the stops, use that liquidity to move it up, or they're going to take the stops on this side and use that liquidity to take it down. We don't know which way they're going to go, but we know that the phenomenon is going to happen, and we can identify the levels where it's likely to happen at, and then be prepared to take a trade in that direction. So right now, in a perfect world, this area here would be an area to buy, just as it was here, here, and here. Now we can't, I'm sorry, here, here, and here, not this one. We can't do that because as retail, we have a stop. Um, this wick down here, 51.93. That's a 100-point move, you know. So unless you have $5,000 for a risk tolerance on your one contract, that's not like buying this level is not something that the average person can do. Buying this level here and just letting this wick come back in your face. Um, but it's the theme. So break up, retest. Now we're long biased and we can look to swing up towards this upper edge. Come back, hold this level, come back in, retest it. Now we can look to buy this and target this upper edge. And this may happen over days, weeks, months, but that's the theme. Break down, hold this lower edge, target the upper edge, and then hold for continuation. And you'll see this on this time frame, and you'll see it on other time frames as well. So backing off, current price action has us right at that important level, at this very important level. This is a crossroads in the market. Um, we have gone from outside edge. So if you caught this short and held on to it, which no not many people did, not with contracts, maybe with options or something. If you caught this short here or here, the target would have been this outside edge. Uh, and remember, VWAPS are the magnet. They aren't a place to sell. They're a place to return to. So this is expected to come back to here. And any move below is expected to come back to here. That's the expectation. Whether it happens or not, we don't know. But VWAPs are not something necessarily to buy. They're something to return to. Okay, so that's the daily higher time frame from uh, aggressive VWAP world. We talked about the potential for the market in the coming weeks to come down and fill this level, and how it is not unreasonable to see buyers come in here as they did over here to continue this upward trajectory of the market. It's not unreasonable to dip below this before we find buyers. In fact, it's almost expected. But if we see the market come down here and we see a bunch of days print down here, that could indicate that there is accumulation happening. And if we spend a bunch of days down here and then take out this swing high, that would be a suggestion that perhaps there are higher prices to come. So even looking at uh, even looking at just this higher time frame, we can see that there are some levels in here, some holographic levels in here that we can pay attention to. We've got this consolidation here that was checked a few days ago, like maybe 10 days ago, right here, and rejected, and retested, and rejected. We can see this holographic level here merge in with these sellers here. So a logical upside check before any continuation down, if we find buyers, would be, if say we get a Judas swing off of this, is to come up and test this. These levels in here, we've traded through them. They exist. We know they're here. These are long-term buyer levels. These are less concerning to me here than these fresh levels that are being printed here, here, and here. So we have three edges here, here, and here to the upside before we have the potential to break out of this wet edge here as we did over here when we broke out of this. So the potential exists to come up here, 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 and continue on our merry way to all-time highs. I don't know what's going to happen in the market. You don't know what's going to happen in the market, but we have ideas of what we can do if certain things start shaping up. And so one of them is if we find buyers down in here and we want to hop onto a long train, we would look to target this, this, and this. So how do you do this manually? This is where the rubber meets the road, and this is why you stuck around uh, to this point in the video. It's getting a little wordy. We got 24 minutes in. I'm going to wrap it up in a hurry. Okay, so wow. All right. So how do we find it? How do we find these outside edges? The outside edges, when you are looking to retrace to something, we anchor the swings. So we're going to anchor this swing low here. And I'm actually going to turn these VWAPs off, and I'll show you how we find these areas. So we'll start at settlement, just because that's where we're at today. And every time price breaks away from a VWAP, we're gonna anchor a new one there. Breaks away here, we're gonna anchor one here. Oh, not there. And see how this VWAP crossed, or this VWAP here, higher prices cross below, outside edge. That's the outside edge. So we can delete this one, and this one, and we'll get a new color here. And now we'll anchor this edge here, and we'll do the same thing. We'll break this up, and as soon as it crosses below, we know we've found an outside edge. We can delete this one, and then we'll go to the next outside edge, get the swing low. We're going to anchor until we get across below, so not yet. And there's our cross below, so now we can delete those two. And these should be those 3 points that we identified. I'm actually going to go back. Yeah, that's it. So now I'll turn these VWAPs back on, and you can see we have those 3 levels identified. Okay, so maybe I'll make that into a separate video. That's kind of the short version. Everything else is the long version. But you get the picture. So that's how you can identify these outside edges, and you can do this in intraday, and you can do this um, like on weekly bars. You can do it all the way down to 15-second bars, 2-tick Renko bars. You can do it on any time frame. You don't have to have this medley of VWAPs in here. In fact, that's very CPU intensive and not always useful. So if I'm going to get long, outside edge of all of these buyers here and these sellers here is this right here, these two. Outside edge of all of these sellers in here and these buyers in here is right here. Outside edge of all of these buyers in here and these sellers in here. And actually, it's important to note those include these buyers all the way from back here and all the way from back here. Even though we're below them, we had new buyers come in, and we can anchor these just like this. And every time price breaks away from a VWAP, we can add a new one, and we're looking for that outside edge to cross down. And when it does, that is the outside edge of that leg, and that becomes a potential area to target or to find new sellers. And that's what we're looking for. So if we're long, we're looking for where the sellers come in, and that's where we want to get out. If we don't find new sellers here, the potential exists to go higher. If we find new sellers here, the potential exists to go lower. So we can find those lower edges in the same way by anchoring down here, the breakdowns. So I'm going to start here, and we'll look to the left, and I'm going to see where we cross up. When we cross up, look at that, right there. So those two came together right there. Now this is a great level when they cross down here, but this level right here, when they don't cross, that's not helping us. So we're going to break down here. Now we've got to cross up, but they haven't crossed over here. So like back, if we were to be trading back in time, say the day started right here, they haven't crossed. This isn't useful to us. But in that day, we can keep anchoring those breakdowns, and we're still looking for the point where the buyers take over from the sellers. So we just keep anchoring these breakdowns until we get the cross. So there would be the cross right there, and that would be the point where we look for a pop up and then a retest of that cross right there, and then the potential to change direction. So when we anchor back here, these all of these breakdowns, and I would anchor all of these um, as long as price is not crossing back and forth. I would I would use these anchors. So you can see here the respect. Boom, that would have been along off of that. So we anchored here, and price came down, caught that outside edge, and then continued higher. Now that we're inside of price, trading back and forth, these are less relevant to me. I'm looking to retrace to fresh levels. So this is a fresh level right here. This is a fresh level. This is a fresh level. Note there are no candles going through these levels. Yeah, candles went through them here, candles went through them here, but they're fresh in that they're virgin and they haven't been tested yet. These are fresh levels down here. And we have that edge here. So when I turn the VWAPS on, you can see where these edges come in. You can see how they're formed. This is the the where the buyers and sellers meet, and we could have continued to drop our VWAPs here off of this, and you can see how they come in. We have that cross that we talked about here, where the cross came up. And we can VWAP this breakdown here. That was supposed to be purple. I'm not sure what happened there. Um, and we had that cross here. And so we're looking for the outside edge. And once we trade through it, then we take those off. And we're looking for that outside edge. So this is the area of the last stand before we have that easy to fill space on that weekly chart that comes down to 40/40. So if we lose this level, potential to break down and continue going up, uh, or if we lose this level, find some significant selling and test lower on those weekly VWAPs. So I think I've said enough here. Hopefully I haven't confused you, and hopefully I've given you some ideas of how you can implement some anchored VWAPs and find these outside edges so that you can get uh, aligned with the higher time frame themes in the market and see where the algos are coming in for these big short opportunities, and give you a context for the day. When you go from one edge, you target the other. Uh, this was a confusing day in here, or confusing period of days in here for me because my bias was short, and I wanted to I wanted to swing for this, but the market was going up. And so when you see this, the potential is to go up to those levels. And so those long and short opportunities, um, like on the higher time frame, don't always translate into uh, being on the correct side of things intraday. Um, but this definitely will get you going in the right direction uh, for that higher time frame move, and can help your trading out. So with that, I will put this to bed. Hopefully you found something useful here, and I will see you in the next one.